All right, what's up, Tycoon? Super excited for today's video. We are going to be taking a look, okay, at ticker symbol run. All right, this is Sunrun. This is a solar energy play, and I'm going to break it down for you guys and show you guys some really key important things. We're going to take a look at volume by price, okay, versus volume by time. Okay, these blue lines on the bar or on the chart here, this is volume by time, and you can see volume, you know, by time. Okay, but we're using the volume profile right now, and we can really see the volume by price, okay, a lot better. All right, and this is going to show you, okay, well, hey, at $56, you can see the volume is much higher than the volume at $73. Okay, so what you're going to look at and want to pay attention, and what I've highlighted is the high volume areas. Okay, these are going to be major areas of support or major areas of resistance, depending on where you are on the chart. Okay, if it's above, it's going to be a resistance, and if it's below, it's going to be a support. Okay, and if you're trading in between one, like we are right now, depending on if you're a bull or a bear, you're going to want to see a sharp move to the upside or a downside, right? You're going to want to see the volume come in either from the sellers, and you're going to want to see massive sell volume down and push the price lower. You're going to see, a high demand and lots of volume from buyers pushing the price up. Okay, so we have those highlighted here. Again, this is going to be our very major resistance. We're nowhere near it right now, but the reason that we're going to want to pay attention to it is because if we look at the price when we go in these low volume areas, the stock price tends to move quickly through these areas to another area of high volume. Okay, so we're currently trading in this high volume node right here. Okay, if we're able to push out of it, right, most likely we're going to head up to an area of high volume. Okay, if we look here in the past, okay, there was a lot of volume in between these prices, and what did we do? We bounced up and down, up and down, up and down, up and down, and then eventually when we did break it, look at that, it just sellers stepped in here. Okay, and there was so much volume, there's tons of buyers coming in and pushing the price back up. Every time we drop back down dramatically, pushing the price back up until they drove, all the sellers came in, and a high amount of sellers came in and drove the price down to where there was no volume, no buyers really stepping in the market. Okay, we just came back down. What did we do previously in the past at these levels? Well, once we broke out past here, okay, there was no volume again. All right, on the buy side. Or on the sell side, coming from the sellers when we were running up. So we were just running straight up, going up, 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 okay, until we got to this high volume area. All right, and then that's when you see things start to pull back. That's when you see a little bit of resistance and finding some support the first time, and then we consolidate and chop in between here again before ultimately just pushing right back through. Okay, so that's the main things I want you guys to pay attention to. The next thing we're going to look at, all right, is some really critical levels. All right, this was our highest volume node. Okay, so what this means is, like, on the 10-year chart, we're looking at 10 years of data currently. So in the past 10 years, about $7 to $6 to about $7 to $6 is has the most volume on ticker symbol run in the past 10 years. Okay, so what that's going to let you know is that there was a lot of early investors, possibly from 10 years ago, where this price action made a lot of sense. Okay, and for us to not come back down to these levels or come to an area where this is our highest volume node over the past 10 years is going to be really, really interesting to see what happens if we do come in there. That really could be the bottom. Now, we are testing these previous lows, okay, from the past 3 years. All right, testing some support levels, bouncing very nicely. Okay, and this yellow oval right here is, if we break these support levels, this is where buyers are going to step in. Okay, buyers are going to step into the market at about 10.75 up to $16 is where the potential for buyers to come in. Okay, until then, things look pretty good. All right, we are going up to the upside. So, for the short term, we do have a nice little bit of momentum. We had a very nice rally today, up 8%. All right, and we're going to break down some signs that, we could possibly continue an uptrend. All right, we're going to look at some gaps on the daily chart. All right, so now that we know where those yellow ovals are from, we'll go ahead and get rid of those. All right. and take those off the chart and look at our daily trend lines. Okay. So we have this nice trend line here and this nice trend line here, forming a little bit of a symmetrical triangle. Okay. Now this is not a bullish pattern or a bearish pattern, right? This can go either way. So what you do is you just try to play the setups. Okay. Potentially look to short at the top of the trend lines, go long at the bottom of the trend lines, and wait to see if there's a breakout. You can trade a breakout to the upside or a breakout to the downside, right? So that's why we're looking at it on the chart. Now, one reason that we could see some further bullish activity in the future, okay, is we have a little bit of what's known as bullish divergence. And I'm going to highlight that by these ovals here. We have this oval here and this oval here, this oval here, and this oval here at the same respective times on the chart. Okay, if you notice, we're continuing lower lows on the stock price, but higher lows on the RSI. This is what's known as bullish divergence. Okay, and when you see this, this tends to be the beginning of a rally. And potentially, right, it's not a guaranteed 100% signal, because if it was, we'd all be millionaires. Okay, and everybody would be doing this every day. But we did have a very amazing rally. Okay. We popped up about 86% in 24 days off that initial bullish divergence. Okay. So now what you can do is you can draw your trend line, draw a nice trend line from here to here. Okay. And extend that out on the chart, because now, all right, when this thing starts to pull back, where's an area where we might find support at? Okay. Well, it would be if you're riding that bullish divergence momentum, okay, it's going to be when you come back down and test that trend line. And what did you know? We have a nice double bounce on the trend line here, and it actually did what's known as bullish divergence again. And all it did was just ride it off of that trend line. Okay, so we have a low here, a higher low here, right? And if we look on this chart, we have a low here and a lower low here. All right, so we'll zoom in on that just a little bit more so it's clear. All right, and take a better look at it. Okay, so again, a low, lower low, low, higher low. All right, and where did we get this trend line from? It was from this initial bullish divergence where we created a higher low on the RSI, but a lower low on the stock price. Okay, so what we saw was it create some bullish divergence on the bullish divergence trend line, and we had a very nice rally again after that, filling our daily gap up. And if you watch my videos, you know that I love to chart up these daily gaps. They fill about 90 to 95% of the time historically in the stock market. Okay. And, in the past few days, we've had about a 22% rally in this week alone, or in the past 7 trading days. So, thank you guys for watching this video. Let me know what stocks you want to see next in the next video. I'll be happy to make them for you as soon as I can. And don't forget to like, comment, and subscribe.